JB Cycles with update on January the 1st. Happy New Year. Are we looking for new lows in January? Let's have a look at my 7-year cycle or 3.5-year cycle, which has been since I started this a year back ago. It suggested a downtrend into this year, 2023, sometime. We have this series of down legs which the cycle should suggest, and yeah, we're here now. We were up in the pain area, up against the 200-day moving average, and now we are approaching the 3.5-year average or 42-month average down here. So I'm breaking below that one. That would confirm probably that we're going into new lows. So let's see. I just have to adjust a bit. Well, here I have the 21-month offset. You know, if we are drawing the downside from the top and to the breaking point of the offset, that could project a downside into the 3000 area. So the signal has kind of been given. So either we should flush down coming months, or we will break above and cancel this signal. Looking at cycles, I have these 3 cycles that I'm watching, 16 weeks or 80 trading days. We have the quarterly cycle or earnings cycle, and we have the 10-week cycle. So at the current point we see the composite of these 3. It had a bounce around Christmas, New Year, but market went sideways, and now the composite of this cycle is pointing down. Should focus on the dominant 16-week cycle. That one is going down into mid-January, end of January. We see the 10-week cycle. It had a pop up around New Year, but now it's going down into February. So we have the offsets here, 16-week offset. Here we have one offset, and we have a 32-week offset. So we see we are staying below these offsets, and we should continue to do so, and we should go down to lower lows. If we see a different pattern or different action, then something else may be going on here. If we look at the 16-week offset, we see if we were to go more sideways or bounce up here, we could be starting to break above this offset. That should not happen in the bearish case, so we have to watch that. So this should be a sideways consolidation before we flush down. And if we look at the average of down legs after a bear market rally, I do have the average, or I have made a band of previous cases. So we have current situation in red, and we see this scenario is going straight down the coming week or weeks into end of January. And although the scenario doesn't show it that well, some cases made their low around this point, end of January, but also many continued after a bounce into an even lower low sometime in February. So I'm watching this scenario. If we start to break up here, then hey, that's not doesn't fit with this scenario unless we quickly flush down. So I would like to see us going down here. Also, I have a very similar one, call it pattern recognition from similar cases. They show this one formation with going down once, twice, and although the average doesn't show it, similar to the previous one. Many of these made even lower low with a third move down here. So comparing here, we see we are at the point where we should start the next leg down. And looking at hourly data, Dow Jones, we are in a tricky situation. We didn't get a real downswing after Christmas, more sideways. So question is, we have this 2-week oscillation, so is it finished? Do we start a new one? Or does it still have some days to go to make some kind of a breakdown here? It's hard to say. It's a tricky triangle situation, and in this situation my indicators normally they don't give me good signals. So this triangle, we could pop up a little bit, making it more like a bear flag, and then flush down. We could go directly down. But if we start to gain momentum here, as I showed earlier, that's not what to expect from the bearish scenario. Yeah, I guess that was it. So I'm expecting, I'm hoping for some kind of a breakdown in the coming week. Could come very early, or perhaps we still need 1-2 more days with some kind of, we'll see. See you in the next one.